One of the few guys on this program who got it right. He said there was a lot of selling going to happen, and it happened. And he's with us this morning. All right, Eddie, congratulations to you. Is there more selling still to come as rates rise?
Absolutely, Stuart. And look, I hate to be more bearish because, as you know, I'm usually very, very bullish.
Yep.
But I have to look at things objectively. And as each week goes by, more and more things start checking off the boxes that we are correct in regards to the warning we've been sharing with your viewers since the beginning of November, that the second quarter of 2022 is going to be the most problematic. And so here's the narrative that I just cannot buy. We have folks saying that the Fed should be very aggressive with rate hikes, and we're going to get 4 to 6 rate hikes this year. Let me be crystal clear. If the Fed raises rates 4 times, and God forbid 6 times, we're going to have the largest cash position we've had for clients in my career, because this economy is slowing down. And the worst thing you can do in a slowdown is aggressively tighten. So we know they're going to tighten. We know the markets are not going to like it. And so that's why we've been telling viewers to sell bounces if they're trying to reduce risk. So I am concerned if they're aggressive with this rate hikes and they think this market can handle it, they're going to be proven dead wrong, in my opinion.
So you're doing the exact opposite of buying the dip. You're selling the dip, raising cash. Now, you talk about the second quarter of this year. That begins after March into April. You think we'll get a 20% correction by then or then?
So look, Stuart, it's already started to materialize. If you look at the last 3 months at some small cap sectors, you look at crypto, there's been a lot of carnage, and it just hasn't hit the broader market yet. If the Fed starts raising rates in March, and they say that they're going to continue to raise rates, and I believe the broader indexes will have a 20% plus correction if they're that aggressive. If they're not aggressive, then I would just expect the garden variety 10 to 15%. But we are positioned for it, playing extreme defense right now, because we've already raised a lot of money out of high-risk assets and being very active. And now the next move for us and for our clients will be going to cash for a percentage of the portfolios if they tell us and if we think they're going to be aggressive on rate hikes. This market cannot handle it, in my opinion.
What proportion of a portfolio for someone like me should be in cash now?
So look, obviously everybody's situation is different.
Sure.
We believe that everyone should have in their portfolio, at least 30 to 40% of their portfolio should be actively managed based on these short-term trends. I can tell you, if we get the aggressive hikes that some people are pushing for, we will go to 20, maybe 25% cash, but then we'll also have a 10 to 15% position in gold and a position in treasuries. Because here's the other thing that we're not consensus on. Everyone says the 10-year is going to soar. If the Fed tightens, we think the 10-year may hit 2% at the top, but then the 10-year bond is going to start to come down. And then you start running into possibly inverting the yield curve, and then that brings in a whole other mess. So if we get that aggressiveness, you can see how we're going to be positioned, and it's going to be to try to protect as much as we possibly can.
Kudos to you, Eddie. You've been right so far, and we appreciate that. We'll see you again real soon before that second quarter arrives. That's a fact. Thanks, Eddie Ghabour.